We are live with another edition of the State of Bitcoin podcast. And I'd like to thank everybody listening on Podcasting 2.0 apps like Fountain. So if you send me a boost or stream or whatever and leave me a little review, I'll read it on the show. So shout out to Halo22B for the boost. And he said, great rip, value for value. So I appreciate that. But there's a lot going on right now in the greater, I guess, crypto slash Bitcoin, whatever you want to say, world. So I think it's now is a better time than ever to bring my good friend Zach at BTC BAP. We've had you on before, but I'm glad you're joining me again, recurring guest now. What's up, man? How are you?
Yeah, man, getting some stripes, We're
Yeah,
all
there
earning
we go.
stripes this bear market. I saw a tweet the other day. It was like, anyone who started in 2020 is officially an OG at this point. Like you've been through the ringer if you're still hodling. So shout out to all
Yeah,
them hodlers.
yeah, amen. I mean, and it seems like the hodl numbers are growing, but yeah, I mean, so obviously you work at Casa and you have like a lot of experience of like the multi-sig and people kind of coming in, getting on board and stuff like that. I've heard some of these other multi-sig providers have said, this week has been a lot for them. So, how are things going over at Casa? Obviously, you can't disclose too much, but I mean, has it been pretty busy with you? And how are you kind of weathering this storm right now with all of this FTX and what have you?
Yeah, man, we're busy. It's amazing that we carved this out time to do here today. Yeah, we're super busy, and this is important. I mean, obviously, you don't want to ever see anyone lose money and like lose access to their funds, but I tell people all the time that people don't really take action until they need to. And one of those things is either something happens to you, something happens to someone you know, or something just happens to the greater ecosystem that causes you to, take action, right? Like people are creatures of habit and everything's fine on the exchange until it isn't. So, I hope, and I've had, similarly, I've had lots of great calls with people who are like, I'm so glad you guys are like preaching self custody. I didn't take it seriously, but I did it. And wow, I'm so glad I did now. Right. So proof is in the pudding.
Yeah, for sure. So, I mean, it seems like, it's FTX has kind of started, but I mean, it goes back to the days of, Celsius. It seems like that was forever ago, where Celsius and Voyager and some of these other ones kind of halted withdrawals. But it seems like it's a trend and it's going to continue to kind of happen. So, what are you kind of seeing with a lot of these like, FTX and some of these other like, I guess, yield lending crypto platforms that that should be, I guess, red flags to people that not too many people are, I guess, figuring out until maybe it's too late.
Yeah. Well, I mean, the yield's got to come from somewhere. Right. And so you have to ask yourself, where is it coming from? And not just like in what mechanisms, but through which counterparties. And I think, it's a new idea that there's an asset that you don't need to generate a yield on. Just the reason you need to generate a yield to say in your savings account is because it loses value every year to inflation, right? But Bitcoin doesn't lose value because it's a fixed supply. And so it's a new idea that people have to still work to get used to, that you don't need to generate yield. And in fact, the yield is through the increase in purchasing power relative to the total share that you'll have over time. So, it's, I'm not like, it's not, I don't want to say it was like predictable because, these are major reputable companies. Like it wasn't predictable necessarily in like the extreme of the contagion that's occurred. But yeah, I mean, if you're printing money out of some thin air, it's got to come from somewhere. And, like all things, they eventually come to roost.
Yeah, exactly. And I honestly, like, with the whole FTX thing, I think, obviously Bitcoiners have been screaming from the rooftops, like, that this thing has been a scam and what have you. But I don't know, man. I mean, like, for the average person, I think if you see, FTX on on all of the Major League Baseball umpires uniforms on every single pitch, You see FTX Arena in Miami for the Miami Heat and the NBA. You see Super Bowl commercials. You see Tom Brady, putting his name kind of behind all this. So, how do you guys, I guess, how do you like read through some of this stuff, and how are you, I guess, telling your customers or people that you're interacting with, like, hey, although it seems like a ton of marketing dollars are being thrown into this company or into this industry, that it's just kind of like the steady growth and the steady I guess adoption of Bitcoin that's really the true innovation through all of this. Like, how do you kind of lead somebody to I guess avoid some of these shiny objects like an FTX or some of these yield products?
Yeah, I mean, dude, that's like should be the red flag right there, because these sponsorship deals, these Super Bowl commercials, these, influencer contracts, they're not cheap. They're not cheap. Where's the profit coming from? Right. And at the same time, they're boasting about, the lowest trading fees and so forth. Again, it goes back to like asking further questions, doing, people say, like, do your own research, I mean, it's easy to say that, if you, think through like, third, fourth order, like derivatives, like, okay, well, where's the money coming from? It's not coming from trading fees. Well, okay, where is it coming from then? There's a lot of stuff where there were people talking about like trading food tokens and things like, for a while that was funny, but it's just real money, right? This is we're talking about like billions of dollars of, value that is trapped or lost, who knows? So it's it's never been more obvious that self custody is different than crypto. Self custody Bitcoin is different from crypto. Um, Again, it's unfortunate that this lesson has to be learned the hard way. But thankfully, like we've had so many people who are learning, and Bitcoiners are right again.
Yeah, I mean, it is kind of unfortunate. You don't want to laugh about, people losing money or anything like that. But, and we'll get into the importance of
Right.
self-custody. But one thing you mentioned here was do your own research. And this is where I kind of want to dig into a little bit, because I've been thinking about it, as much as SBF is at fault, and he, obviously
Yeah.
like used user funds and did a lot of very, very bad things. But at a certain point, like, shouldn't we kind of blame a little bit of the venture capitalists that funded this, and kind of put a bunch of dollars behind it? Because initially, although SBF, scammed thousands of people, millions of people, I think a million users,
Yeah,
right?
there's like a million creditors.
Yeah, a million creditors. At the end of the day, he got a bunch of this money and got a bunch of backing from a lot of venture capital firms. And we've even seen people like Kevin O'Leary go on and say on television that if he were to come out with another project in the crypto space, that he might back him, depending on
Dude,
what
it
it is.
really it comes down to a philosophy that I stand by. You have to take personal responsibility. It's for all things that happen to you, for things that happen around you, for circumstances in your life, for mistakes that you make, for successes that you have. You have to take personal responsibility. And so it's very easy to point the finger at it's their fault. It's the politician's fault. It's the venture capitalist's fault. It's the media's fault. It's Kevin O'Leary's fault. No, it's personal responsibility. To the degree that you're affected by this, is to the degree that you should take personal responsibility for it. And that doesn't mean it's your fault, right? Like, and I want to be clear that that doesn't mean like you should blame yourself either, right? Like, but there is a level of personal responsibility that people need to take, and that is so much of the Bitcoin ethos. The idea of self custody to the highest degree is personal responsibility on steroids, right? Because if you lose your keys, you lose your money forever. There is no one to help you. This is why CASA exists, because we understand that personal responsibility is scary. We understand that personal responsibility is a new thing when it comes to custodying funds, especially a meaningful amount of someone's life savings. And so, Yeah, I mean, I deeply empathize with anyone affected by, the whole year of just disaster that this has been really, but, hopefully there's a silver lining where people learn that personal responsibility is extremely important, and, there's a level of honesty that you have to take with yourself there, but it's an opportunity to grow as a person and as an industry.
Yeah, for sure. And I agree there 100%. Yeah. I mean, personal responsibility. And yeah, I mean, it's interesting because a lot of people want that personal responsibility behind Bitcoin, but then still get a little nervous when it comes to the self custody aspect. And obviously, that's where Casa kind of comes in to help with that multi sig. So let's get into the importance of self custody and kind of taking ownership of your money and of your funds, personal savings, what have you. um and the unique aspect of Bitcoin, because I don't think that there's really been any way that right now, you or I get paid. It goes direct deposit into our bank, most likely. That's how most people are getting paid, right? And we have to go through a bank where we either use a debit card or go to an ATM machine to get our money, and then we have to pay that ATM machine some sort of fee, more than likely, to get some cash out of our account. And then there's all of that kind of recording and everything behind it. But Bitcoin's a little different, right? Where you don't really need that third party, and you don't need anything like that. So, what I guess is the biggest mental hurdle for people kind of coming in that come to Casa for like multi sig, or maybe even people that you're orange pilling and bringing in, onboarding to Bitcoin in your own life, that that self custody aspect is just kind of pretty intimidating for them.
Yeah, I mean, it is intimidating, like, full stop, like, it is, dude, I still get nervous when I send Bitcoin, so I don't think that that stops, actually. Like, I don't think that people stop getting nervous when they do things that have extreme importance and, finality to it, but there's a certain level of empowerment that comes with it. So, Casa tries to help people feel empowered and be able to do self-custody on their own, or, at least on their own from a private key standpoint, right? Like, they don't have to give up custody. It's not like a black and white thing where either you have custody or I have custody and I have to do it all by myself. So there's people and there's companies like Casa that can help without giving up custody. And that's just by having a recovery key where if you lose one, it's not game over, right? In the simplest way.
Yeah, for sure. So, I mean, there hasn't really been any kind of like revolution or anything like that, or I guess I don't know, I can't even think of the word right now, but like digital aspect of anything where you can have your own digital property like Bitcoin. And so this is obviously one of the main unique properties of Bitcoin, and the decentralization aspect of it and everything like that. Really doesn't require for you to have anything like a Casa, or like maybe a FTX or anything like that. So I obviously there's a lot of benefits too, because it kind of helps. A Casa with multi sig helps take away some of that worry. Like you said, if you lose a single key, you can kind of you have obviously you guys, and then you have another third party, at least in my understanding, that has the other key too. So you can have various packages where if something were to happen, that you're not going to completely lose everything. And so I guess, what crowd or age group do you think that this kind of appeals to the most? Are you running into now, like, just newer people that are kind of coming in that are a little afraid, or are you running into, I guess, yeah, obviously you don't know how much bag people are carrying or anything like that, but people that maybe have like a good amount of their savings into it? Or can you kind of talk about the demographics of people that are kind of coming into the multi sig realm?
Yeah, for sure. I mean, really, it's all types, right? Like, Bitcoiners are everywhere, and from teenagers and younger to people in their 80s. So not just age, but all over the world. Casa works all over the world. because we aren't a custodian. You can use it anywhere. And because of that, it's like amazing how diverse that is. So I'm careful to like pin a specific demographic, but more so like a type of a stage of where someone is. So, it's great. The single key is like the pay wallet. And this is great for someone just starting out because they have self custody, but it's backed up to their cloud. And why that's important is that so many times when people are starting out, they take screenshots of their seed words, right? And like that's game over if your cloud gets hacked in that way. But if your cloud gets hacked and the screenshot is not raw, but it's the seed phrase is rather encrypted in a file, then they also need to get into your password manager and get access to your Casa credentials. So it adds a layer of authentication to just even the simplest of a single key hot wallet for someone just starting out. Now, on the higher level plans, we have multi signature wallets, the multi key vaults, and these are designed for larger balances where you'll hold for, I mean, it doesn't need to be any amount of time, but typically it's for someone who's holding it for a longer period, right? And, this is great because there's multiple keys tied to the address. So if you lose one or one is stolen, you don't lose access to it. And particularly when you get multiple keys involved, like in the 5 or 6 key setup, you can start distributing these keys amongst your heirs. And then you can do some really creative stuff with like legacy planning and making sure that access is given and achieved when needed, but not before. And so that's kind of a unique thing that you can do with that type of structure of a wallet, particularly in the security model too. You can you can take keys and put them all over the world. Good luck, having governments that hate each other cooperate to get your Bitcoin. Maybe, right? But each of these things is further strengthening your security model.
Yeah. So let's get into, I guess, the different like kind of packages and options, and kind of the various levels of security. You kind of went into it a little bit here with, obviously like taking a picture of your seed phrase and then encrypting it in your cloud, and then obviously the farther extreme where you could have your seed phrases all over the globe. So what are the kind of like the varying ways that you see that you can use multi-sig to kind of help beef up your security and beef up, I guess your hold of your private keys.
Yeah, I mean it's essentially just, the weakest link. In a single key wallet, there's a single point of failure. So it's just about removing single points of failure. So by distributing your keys in different locations and generating them from different hardware devices, it just allows for more room for error and more things have to go wrong, right? So it's not foolproof, but it's close. It's the closest thing we have, right? Like nothing is foolproof. Like there is no perfect security, but there's a ideal security for someone. So like I can't get into like too specifics, but if someone wants to, and like to that point, like if someone wants to talk about their personal security and what works for them, come book a call. I'm happy to walk people through it.
Yeah, for sure. And I kind of want to get into like the KYC aspect of it as well. So obviously there is like a privacy aspect of it. Some people don't like to let people know, how much Bitcoin they have. They try to avoid buying KYC Bitcoin. And for those who don't know, it's KYC is know your customer, and essentially that attaches your name and however much information you give a lot of these exchanges to that Bitcoin transaction. And so once that is transaction somewhere, there's obviously that ledger that's kind of tied to your name. And so I know that Casa is kind of unique in that aspect where you don't necessarily need KYC if I'm remembering correctly from our last conversation. So why don't you go into a little bit of, I guess, the privacy aspect of Bitcoin and how you know people can avoid I guess anybody really knowing how much that they really hold.
Yeah, private privacy is like a never-ending challenge, you know, it's not like you do it once. It's a lifestyle. So, you can sign up with Casa with an alias, and as long as you're not using the inheritance planning features, you don't need your ID. The reason you need your ID for those things is because when you die, we have to know who to verify, right? If you we haven't figured out that part yet, but we're working on it. Um, but until then, yeah, I mean, as long as you use the lower level, if you use like the basic multi-sig plan or 120 a year plan, you can sign up as Satoshi Nakamoto. A lot of people do.
Yeah, so I guess it always kind of brings me back to, when somebody's getting kind of initially onboarded to Bitcoin, and there's the privacy aspect that people, maybe have a question about, or maybe are kind of like skeptical about, right? So a majority of people that I talk to, they're like, "Oh, I'm gonna go buy Bitcoin. I'm gonna go to Coinbase, or I'm gonna go to one of these, bigger names." How do you kind of, I guess, sway people to maybe go to a different place to buy Bitcoin and kind of avoid maybe all this KYC information? Or are you kind of just sending, maybe the initial people to maybe like a Cash App or a Strike or something along those lines?
Yeah, I mean, all those places require KYC. Like,
Mm, exactly.
the best way to get no KYC Bitcoin is to mine it. I don't really know of a consistent, reliable way to do it otherwise. Even the ATMs, they have a lot of them require your ID and their fees are quite high. So, yeah, I mean, I'm not really the person to ask on how to acquire no KYC Bitcoin. Um, I do think that privacy is a right, and I also think it's a lifestyle. So, there are people that are privacy minded individuals that you probably should have on the show that would have a better, be able to speak to that better. But yeah, if you want no KYC Bitcoin, go get it in What's Miner M50. They're like 2,200 from Kaboom Racks right now. Crazy deal.
Yeah. Yeah, exactly. So miners are definitely very low. But yeah, I actually had a Heady Luck on for a not too long ago, maybe a 3 or 4 months ago before this big giant dip down to 20K. And he kind of went into how he does it when using he was like says he goes buys like a burner phone and does all this stuff in cash and everything too. So he kind of goes and explains like how to do it in that episode. So I'll probably link that in the show notes too. So if anybody's interested to go learn a little bit more about that, be sure to check out that episode because it's really good and provides a lot of information. But on that note, it is difficult, and it is kind of not a, I guess, a trivial way to kind of go and buy some of these like non KYC routes. So, yeah, like how do we, I guess, prevent, some of these custodial places where we're buying and selling Bitcoin and obtaining Bitcoin and kind of pulling it immediately off these exchanges from going under? How do we kind of, I guess, vet some of these places to buy Bitcoin? Because it seems like as it states, all of them are kind of coming crashing down right now.
Yeah, man, I'm trying to figure that out myself, to be honest. These a lot of these crypto exchanges are not banks. And so I don't think it's a good idea to keep money on there for any amount of time. It may be a necessary evil to purchase it, right? But that's the chance you take. You could always market buy. I personally think Robinhood is a pretty cool solution for three reasons. The first is that their brokerage account, Like when you deposit money to buy Bitcoin there, it is a brokerage account. It's not like an unregulated account like a lot of these exchanges. So, again, do your own research, personal responsibility. But like to my knowledge, those accounts have some investor protection when the money is sitting in cash. When it's in Bitcoin, it's a whole different story that I can't really speak to because I don't know. I would imagine you're not protected. But if your money's sitting in cash there, it's okay, I think. The second reason that is appealing to me is because they also have very low fees, and then they now let you withdraw. Right before it was like it was a non-starter because they didn't let you withdraw, but now they do. So yeah, I think that's like a good option.
Wow, that is pretty interesting, and I don't know if you heard this. Spaces. There's been a ton of spaces going on the past couple of days. All kind of around this. And Michael Saylor kind of went into how MicroStrategy custodials their Bitcoin, and he said obviously they're such a giant company, they can't have one single point of failure, so they trust another company who's regulated. And he didn't necessarily come out and say who, but he brought up Fidelity because they're a regulated broker. And because of that, they have to go through all these various things, and they're publicly traded company. They get audited every quarter at the very least. And so and they're holding a bunch of other people's funds. So if they didn't have that, and they have so many people checking all these all their accounts, they would be in a lot of trouble, and they would be underwater, as well as whoever's like holding their accounts. So I think you're, as much as I like hate the regulation, if you're worried about something with the like something like an FTX, or the Celsiuses, or what have you, a lot of these companies are offshore or have some sort of aspect like that to them. And so, as much as I hate to say it, but the more regulated ones, or at least the United States based companies, seem to be a little bit better suited to avoid, something like this. Would you kind of, I guess, agree with what Saylor went in with that?
Yeah, like any exchange that has a token, I would stay away from. Um, any exchange that's based offshore, I would stay away from. FTX US was technically US, right? I don't actually even really know the specifics, but they had a token. So any you're in my opinion, the best route, if you have to go that way, is you have to be the best. I mean, yeah, the regulated like Coinbase and Robinhood, like the people less likely to steal your money are the ones who have more to lose by doing so. That's like my approach. So but my true recommendation is if you're still sitting on dollars, why do you still have them? So in my mind, like the Bitcoin should have been bought a long time ago.
Yeah, but if on that note, it is interesting because I always give Joey from the Canadian Bitcoiners podcast crap, because he said earlier in this bear market that he was not turning off his DCA, but kind of slowing it down, or hinted at that, because he thought another big dip was going to come. And so how do you, I guess, weigh out to people, or kind of recommend the DCA and chill method, other than like a lot? I feel like a lot of people are kind of waiting in down here to buy a deeper dip, and they keep thinking like more and more is coming, more and more is going to crash, and what have you. But I guess how do you? For me personally, I'm just like, all right, I'm going to keep the DCA rolling, just keep it going, because I'm not trying to time it and be, I think that's very difficult. So how do you, I guess, weather that storm when people kind of come to you and say like, hey, I bought at 30K, I bought at 40K, 60K, what have you, and now it's at 16, 17. I've lost all this money, even though they obviously still have all that Bitcoin. So yeah.
Yeah, I mean, anybody who's bought in the last year is underwater, right? So, um, yeah, I mean, I would say, like, just like the exits close immediately, in this case, like with the exchanges and stuff where you don't get notice. And look, I'm not like fear mongering or anything. Like, I don't necessarily believe this is true to occur, but I do think it is possible that it could occur. Um, there could be a day where you're just like not allowed to withdraw Bitcoin anymore, and you're probably not going to get notice. There could also be a day where you're not allowed to exchange dollars for Bitcoin, or there could be a day where you're only allowed to exchange certain amounts of dollars for Bitcoin, like in Canada. Isn't that a thing now? Only certain amount of crypto per day
Yeah, I
or
believe
dollars per
so.
day per year. So, you know, to the people that are waiting to get a preferential exchange rate, consider the fact that you may get a infinite or zero exchange rate in the future because you just may not be able to get it. Just like, you know, if you had money trapped on the exchange, you just may not be able to get it. So, 100, you know, no yield is worth 100% loss.
Yeah, I mean that's extremely powerful there, right? I mean, I don't know how I can follow that up, man, because you're 100% right, and I think like all the signs and the red flags are popping up left and right, and I think it's kind of deterring some people away from Bitcoin, and kind of like looping it into the crypto world. Although we're having a lot of people, I know I've seen Natalie Brunell, I've seen Jack Mallers, I've seen Michael Saylor kind of go on some of these mainstream media outlets and kind of differentiate between crypto and Bitcoin. But are you kind of still seeing that there's still that, I guess, that knowledge gap between the two of them, and that they're still kind of, bringing them all together and kind of joining in that Bitcoin and crypto all in one, and then looping this FTX thing all with Bitcoin as well?
Yeah, yeah, definitely. Like, it takes a while to understand, you know, and the differences aren't obvious right away. And it takes people learning from things like, I mean, Jack Maller's thing on CNBC yesterday was absolutely epic. Like, dude, he's the Bitcoin CEO as far as I'm concerned. I mean, he just has such an eloquent, matter of fact way of of clarifying it. But yeah, I mean, it takes a while. People are going to understand the difference, and you know, like it's even like stable coins. Like, I mean, the issuer of those, they're highly, highly regulated. Like, I don't recommend people store their money in dollar denominated assets because of inflation, but I don't give financial advice anymore. So, the idea is for Bitcoin is that it doesn't lose value over time. Stable coins do because they're pegged to the dollar, which is inflationary, or any other fiat asset. That being said, like if somebody wants to self custody stable coins, they should be allowed to. Like it's not, that's within their right, I think. So, my goal is to, and what the Bitcoin movement to me is a reclaiming of personal responsibility. And with that comes empowerment. And with empowerment, maybe, just maybe, the world becomes a better place to live in for us. That's why I'm in it. I'm not here to flip monkey pictures.
Wait, so you're telling me you haven't sold any of your Bored Ape NFTs yet to try to
Oh,
flip
dude,
for
I
it?
should have though. I should have. God dang it. I had
I actually
I had yeah, no, I'm not gonna get into my I won't get
I
into
actually
that.
think I saw like there's something on Twitter today that Justin Bieber bought a Bored Ape for like 1.3 million, and it's down to like I don't know, like 70 grand or 7 grand or something
So
like that.
what?
So he's lost, yeah, almost 90% of his money. So, or
See, that's the
98.
thing. Like people confuse this like affinity stuff from celebrities. Like that's like a minuscule like fraction of what his wealth is. Whereas like other people are like 60, 70% of their wealth in NFTs, like just some crazy stuff. Like, so yeah, when like you see these like celebrity endorsements and stuff and, like sponsorships and whatnot, just like consider like how deeply are they tied relative to their total wealth.
Yeah, that's true. I actually just Googled it here while we were sitting because I was curious. So he bought it for 1.8 or 1.9 million or something like that. I forgot what I even said earlier, but his net worth is 285 million and he makes 80 million a year. So that is
Rounding error.
very, yeah, very, very small amount for him. So, yeah, I mean, you're completely right. Like these celebrities and high net worth individuals can kind of afford to take some of these risks, whereas a lot of these people that maybe got burned by an FTX or some of these other yield platforms have a significant amount of their net worth in there, or I've even heard stories of people like saving up for their weddings or doing other things like that in some of these platforms, and then all of a sudden they're getting close to the date, they're ready to withdraw it, and the withdrawals are shut off. So
Yeah, dude.
it definitely a lot of blood in the streets and a lot of pain in the market for sure. But I do feel like there is some positive things going on in the market. I think that there's a lot of Bitcoin being taken off of exchanges and being moved into more of the cold storage wallets. So what is making you bullish in the midst of all of this?
Yeah,
You know,
hard for the
this,
Fed not to pivot after, like, Bernie Madoff, uh, at least what seems to be, as it's unfolding, like, one of the potentially, like, biggest stories of our, financial modern financial history, so hard for the Fed not to, like, pivot on their interest rate policy now after, like, $10 billion disappeared, but then again, maybe, like, that's just also a rounding error to the amount of money in circulation, so that would be, like, I would say that, if I could try to find a silver lining of it, it's, lots of losses lead to a decline in spending, which leads to easing of Fed policy, which leads to the markets coming back. So that could be like a one positive way to try to spin it, if you're like to steel man that. But absolutely, like the more obvious one is what you said. Like Bitcoin self custody worked just fine throughout all of this. Like strange, private keys still function perfectly. So that's yeah, that it, there's like, there's some kind of like ancient Chinese lesson here, right? Where like the forest burns and it grows back like the most lush part of the woods, right? So, unfortunately or fortunately, depending on your perspective, the forest is burning, but with the power of patience and a little bit of foresight, I think it'll grow back even, more greener and lusher than before. And in that analogy, that means more people own Bitcoin in self custody today than ever before. Than ever before. I guarantee you this. As of today, November 17th, 2022, more individuals hold their private keys than any day in history before. There's just no way that's not possible.
and I think it's going to keep continuing to grow that way. And it seems like, at least for this bear market, more and more people are kind of keep moving Bitcoin off of exchanges and into, hardware wallets. And so it's just, it seems like you guys are very busy at Casa, and I'm sure like the other multi-sig providers are, just swamped these days as more and more people are like, all right, help me self custody my own Bitcoin. So, I think that I'm definitely bullish, going forward. And obviously, I wouldn't be keep doing this if I wasn't.
Right,
But
right.
the one thing I want to bring up and I want to talk about and kind of round out the show about is that you brought up the Fed pivot, and I'm not 100% sold that they're gonna pivot in within the at least the next year, even with all this, because and I'd like to hear kind of like your thoughts about it too, because although the United States economy is not doing well, we're seeing a lot of these growth companies, tech companies like a Meta and some of these others have massive amounts of layoffs. The dollar compared to other fiat currencies, it is kind of ripping and doing well. And the United States' greatest export at this point is the dollar, which is kind of unfortunate, as it should be, various other things and some actual, commodity or product or something like that. But I feel like Powell is going to kind of work his way and try to do his best in order to strengthen the US economy relative to the others, globally. And so I think although he might not keep doing these 75 basis point hikes, I could see him keep hiking, up until like midway through next year at the very least. Even with, kind of some blood in the streets. And he's even said in the previous meetings, like, prepare for pain. And it's going to be a decent ways up. So, what are your kind of thoughts on that? Do you think like this crypto crash might kind of accelerate that timeline up a little bit and make the Fed kind of change its tune, or do you think kind of I guess align with some of my thoughts?
I do agree with that. We may differ on timeline. I'll just I'll just throw some darts. I think the crypto market bottoms in January or late December, and the equity markets bottom in March/April. I think by the end of next year, people are going to be amazed at what a Fed signaling, not even a Fed pivot, but a Fed hinting of a maybe of a maybe of a pivot. Like that. The economy is so hooked on infinite money and having such withdrawal shock right now that even just the hint of it coming back will flood their dopamine receptors throughout the trickling throughout the economy to even before it gets there. I read this thing about happy hours and like the first beer that you have, and it's like, or maybe it was the Huberman podcast. Either way, he says it's not even the first sip of beer that floods your dopamine receptors when you drink, but it's actually like the sound of it, or like the anticipation up to that first sip. That's where the dopamine actually gets released. So I think that's the same here, where they don't even need to pivot. They just need to like talking about pivoting. They need the pre-announcement of the announcement of the announcement, like on Twitter, and you'll see things, sentiment change quickly. That's my prediction, if you will. But more pain to come. Maybe, man. Maybe. I don't know. I
Yeah,
mean,
it's
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 if this year's taught me anything, it's that we definitely live in a simulation. It's for sure. Like without a
yeah.
doubt. I'm convinced now.
It's funny you bring up the comparison to, going to a happy hour and taking that first sip of beer because, I remember seeing this Barstool video. I think it was like a Sunday conversation with Bert. I don't know how to say his last name, like Kreischer or something. He's the machine comedian. But he was just kind of going on this rant about, how he just loves, just drinking at random times. And he said he's going to keep his body as healthy as possible just so he can have a drink. And he said, it's like the first kiss feeling when somebody walks up to you and then they go to brunch and say, do you want mimosas or something like that, just kind of like
Mhm.
hinting at drinking at inopportune times. And he said, you don't really get that first kiss feeling when you're married, but when you have that first sip, that's when it all hits. So I
Yeah.
think that's pretty funny comparison. But yeah, I mean, I definitely hear you on the market with that.
I'll one more metaphor or analogy to that. Same thing is true with money. The fantasizing about wealth and what you're going to do with it, for most people, is more enjoyable than the having it. So realize that if you're, if you're chasing something, if you're waiting for something to get you to where you want to be, just be, you're going to be chasing it forever. So just be happy with where you're at today. Be content. We're here. We're going through some amazing, amazing time in our life in history. Maybe we come out the other side better, but it's amazing nonetheless.
Yeah, exactly. We're going through a monetary revolution, it seems like, with Bitcoin. So,
More than
on
just
that,
money, more than just money, you know?
yeah,
It's,
amen. Changing everything
Breedlove
on
talks
society.
about Breedlove talks about how money hits everything, right? And so I agree with him. It's like the money revolution is just kind of like the beginning. What really excites me is what happens to society after.
Yeah, for sure. And so, Bap, you've been very generous with your time, just kind of squeezing it in here with in between all your meetings at Casa. So, why don't you tell everybody, where they can find you and what you got going on?
Yeah, yeah. If you're looking for an easy way to take self custody of your Bitcoin, keys.casa. We have everything from a easy to download mobile app, single key to, you know, multi-sig distributed all over different places if you want. There's, people like myself that can help you get it set up and get you confident and your education to where you need to be. And yeah, we'll have some exciting stuff coming out in the next couple months.
There we go. And then find them at Twitter at BTC BAP, and then tell them about the Value Stack podcast and all that too, man.
Oh
Don't forget
yeah,
to show
dude.
your
Yeah, dude. I'm not a good self shiller. Um, yeah, I host the Value Stack podcast at Value Stack Pod. I'm not really sure what we talk about, to be honest. Like I used to say it was like value investing in Bitcoin. Lately, it's been Bitcoin mining and energy. I don't know what we talk about, but people like the show. So I would say that, go to it with an open mind and hoping to stack some value in whatever that means to you. I think we have some good conversations. My most recent guest was Rob from Upstream Data and Distributed Hash, and they do ASIC testing and large scale Bitcoin mining research, as well as like flare. Upstream Data does the flaring in the oil fields and the petrol, solutions with the black boxes. So yeah, man, there's some like 5 episodes coming out soon. So yeah, definitely check it out. Value Stack Podcast. It's on all the things.
Yeah, there we go. And then J Bug's in the comments saying it could be value in life. So there
There you
you
go.
go. Not just money or investing. So all right. Well, go check out BAP and all the stuff he's got going on. Go check out Casa, Value Stack Podcast. And thanks so much for coming on, buddy.
All right, Brandon. See you, man.